what kind of topics you want to talk about. What's on your mind?
Besides the ERC? I thought
No, ERC. Focus. One of mine is navigating the IRS to get to the answer.
Well, good luck. We've been trying to get answers.
Right. So when I did go to the FAQs, Larry, this morning on July 5th, and most of the questions were updated in 2020, the FAQs that exist.
Do what? I didn't. What? When?
2020.
Oh, okay.
But that's most of the, I mean, so we know the FAQs, if you're going to look for information on the IRS website, you go to the FAQs to try to determine some information. The most updated was that I saw was 2020.
And we're July 5th, 2023.
Correct. And so we have FAQs that were most of them updated June 19th of 2020, which means that several of them are of course very outdated. One of the key things that I saw this morning that I thought was interesting was I looked under other issues in the FAQs. It does tell, it's a warning, it's historical. I still think there's some information there that can be valuable. You just have to dig for it. So I looked up the, kind of the eligible employer and the records. So what kind of records and the reliance of third parties. So I thought it was interesting that the third party payers rely on client employer information, and keeping in mind that in a lot of these situations, and I think, Larry, you've seen it in some ERC advertising, the client is taking full responsibility for the eligibility for the ERC.
Right.
And these third parties actually can rely on the client information if they feel that it is reasonable and accurate. So they're all the, so much of this goes back to the client and the business owner that really typically is not understanding the complexity of the employee retention credit. And the latest FAQ I could find in regards to that reliance is dated June 19th, 2020.
Yeah, and Kathy, I think you had really hit the nail on the head. If we think back at how we do normal tax returns, we recommend to the client as a tax professional, but these are third parties, but we say, here are your options, make sure the client has a knowledge of it enough to say, what's your decision? But I'm looking at, when I look through these, and, I have the company that I do seminars, a company I own, and I've gone online, a lot of very popular ones, Bottom Line Concepts, Jefferson Duke, ERC Specialists. I can go on and on and on. And I'm going to quote what the individual company said, but every single time when I looked at the agreement I was going to sign, here's one: by providing the information herein and signing below, the client acknowledges and attests that it is eligible to claim the ERC. Here's another one. Quote, the client acknowledges they're a qualified business entity to claim their employee retention credit, ERTC. And I probably have 10, 12 of these where I've gone online. My point of it is, when it comes down to it, when I sign that agreement, the client, because I'm the client, they're the ones telling me I qualify in my small seminar company. But what I'm doing is I say I qualify. So when the day of reckoning comes with the IRS, if they do show up, this third party, not a practitioner most of the time, just third party, is going to say, wait a minute, they made the decision. And that's what really scares me, because it's going to be the client made the decision. But the crazy thing is, one of those lines I read you, I also have the application here. I won't leave it up for long enough you can see who it is. But here's my qualifying questions. So, Roger, I'll go to you, and then Kathy, I'll go to you. I need an answer based on the question, no additional information, because this person helped me fill this out.
Mhm.
I was on the phone. How was your business impacted by COVID? Please check all that apply. Full shutdown. I said no. Partial shutdown. Roger, explain to me what a partial shutdown is.
Well, it means that something related to COVID and the government caused your business to lose a substantial part, not a substantial, a part of its operating costs or operating ability during the pandemic that was beyond their control, and therefore they're eligible. But
Well,
it's got to be enough.
okay.
But
But
the key
Kathy-
being a government order. It'll
Yeah.
have to
Order
be
calls
a
you-
government order.
Order. So that's the key there, is if it said partial shutdown because of a government mandated order for that time period. But he never explained that to me.
Mhm.
So I think right there is a huge one of people saying, oh, I qualify, because they don't explain it. Now, so it's a full shutdown, I was shut down, but I had to pay the wages. If I'm a partial shutdown, it had to be because of a mandated government shutdown, not because it was on TV or social distancing. The next one I love, supply chain vendor interruption. Kathy, help me on that one.
Well, that of course is the most complicated, I believe, the most complicated qualifier. But it's also probably the most abused qualifier. So to qualify under the supply chain disruption, your business, you had to have gone out, excuse me, you had to have gone out to try to get your materials elsewhere. You have to show that you actually attempted to get materials. If your supplier could not deliver, you need to show that you went out and tried to get materials from others, and you were unable to obtain the materials needed to be able to produce or manufacture whatever it is that you were doing. But the key there is you have to have gone out and attempted and shown that you were trying to get materials from other suppliers if your one vendor did shut down.
So, but did the supply chain vendor interruption, did it have to be during a government mandated shutdown?
So the supplier down the supplier down the road had to have been had to have had a government mandated shutdown that affected their ability to deliver you the product.
Right. So here I went through this whole list, and if I read them and I added, because see, we have two rules. We have one because of gross receipts. That's a percentage test. All the accountants do that,
Easy.
all the tax rules. But when we get over to the second one, it has to be all these full shutdown because of a mandated government required shutdown, partial shutdown during that time period, supply chain vendor interruption. It had to be during my mandate, or else if it was a supply chain, it had to be, we have to get information from our supplier. But, and I like this because actually this is notes from a law firm. It's called Risky Business. And it's real risky because that's a puppy bite out of my research. But the thing about it, it's the supplier ability to make delivery of critical goods. So it can't be the paper towels. Could I get them from another, but we're going to here in a minute get over to more than nominal. See, if it was, I couldn't, today I stopped at a place, there was an item that the person said, you have this, and she goes, it was a retail store, and she goes, well, we generally carry 2 or 3. Well, how come you don't have one? Well, you know what? She goes, we can't get it from our supplier. Well, that is a supply chain interruption because they're not manufacturing as much because of they can't get people to work. It's not from the mandate. So the employer ability to purchase critical goods from an alternative supplier and the consequence on the business due to the inability of purchasing of critical goods is more than nominal. So that's 3 tests to get to the supply chain, but nobody ever talks about it. So Kathy, I agree with you.
One of the things that's interesting in what you're talking about, one of the things that frustrates us as practitioners, these third parties, they don't have an ongoing relationship with these businesses. So they just go into the business and say, self-certify, if you will. We have more knowledge than that. We know those businesses. We know what they went through. We are afforded the luxury of telling a client, you just self-certify as if I don't know all the facts. And then we deal with those clients when they come to us and we have the facts and they self-certify to a third party who just said, hey, I'm just a third party here. I relied on the client. I did it. I'm gone. I'm out of here. And then they come to us. That's one of the big frustrations is we aren't able to just say, because if we could do that, think of how tax season would go. You just sign a document that this is what your tax return is supposed to look like, and I'm good.
Right. And if we did that, our due diligence went out the door,
Everything.
our professionalism went out the door. We're getting 20, 25, 30% of the fees goes out the door. Roger, since you're County on a roll here, the next one, I love this list. The next one, finding employees and keeping them. That's one of the options. If I check that, this company says I qualify. Again, guess what's missing? Because of a government required shutdown.
Right.
All it just says is finding employees and keeping them.
I don't even know what that means, honestly.
Well, nobody can find enough employees. So you ought to.
Of course not. But you got to pay them wages to get a credit. So I had to find them or I didn't pay them. So I don't get the credit. So I don't know what they're asking, but they're not really concerned about the law. They're concerned about giving us an appearance that they did whatever a third party's due diligence is. So they can give the people, because they know if they get the business owner hundreds of thousands of dollars, the business owner's happy.
Yeah.
They're
Well,
happy.
they got their fee. They're happy.
Yeah, they got their fee. So everybody's happy in their world.
And they're not doing this again. This isn't repeat business. Not like they're going to be looking for for the ERC in 5 years.
No.
Well, the interesting note is about a month ago, I had a practitioner to send me, it was one of those that they were wanting to pay it back. And the person that actually said they qualified and changed the number on the 941X for all 6 quarters was a law firm that I went on their website, and their specialty is auto accidents. ERC was not on their website anywhere. There was no divorce. There was no small business. There's no corporate. It was strictly, they now are in the business of ERC. And I went to the website. How do you go from how do you do this and not do payroll? How do you do this and not do taxes? How do you do this and not have, Roger, as you said, the relationship? Kathy, you've said, I've heard you over the last 3 years. The 3 of us over the last 2.5, 3 years has been crying. But again, I'm done. There's other selections there, but we've done 4 or 5. But my takeaway on that, had they said on each one of those from a mandated government shutdown,
Right.
how many small businesses would have said, I can tell you here, I live in South Central Missouri. The bad news is we had PPP during a short mandate right up front. But we never had another mandate. But I've got people walking in the door that are wanting to be new clients for me to amend the return. And I'm like, you can't qualify. What do you mean? Well, you didn't meet the gross receipts test. The only way you can do it is the other test related to a government mandated shutdown during that period only. And yet there's people here in my neighborhood that are qualifying it. And it's obvious. But even the obvious is not in this case. It's called money.
Yeah, and going back to your point, Larry, of the kind of communication that's out there, I've got a communication recently, very recently, from Innovation Refunds, Liberty Bank, whatever. I don't know if I'm supposed
I've
to say
seen
their
that one.
names. But the thing that bothers me about this communication is it says there's 3 things on the front. It's like a flyer, but it says your business may qualify even if it stayed open or increased profits, which is true. It already received the PPP, and that is true. But even if you were advised that your business would not qualify. So right there, they're planting the seed for all the small businesses out there that if you were advised you didn't qualify, you better revisit that because you still can qualify. I mean, it's an undermining of the professional, of the tax professional, of the relationship that business clients have with their accounting firm. It undermines that and it's saying that, you need to contact us because we may be able to, you may qualify even if you were advised not to. And that really bothered me, that verbiage, because that is a direct undermining of everything that we've tried to do for small businesses. And of course, we want our businesses to get what is duly owed to them, what is duly right. We want them, if they qualify, it's not like we don't want them to get funding, and many businesses really suffered hardship and just didn't ever go for the ERC.
Well, and Kathy, I think you bring up a really excellent one because one of the things here at the firm we focus on is cash flow. So you got 2 businesses across the street from each other. Here where I live in Central Missouri, they don't qualify for the ERC because there was no mandate after the time period they were covered for PPP. So their competitor that somebody else is doing gets the ERC and they don't qualify. And then what happens is that puts them, they got an injection of cash flow that they got a competitive edge on the tax payer, the small business trying to do it right. And I'm telling the small business, you don't qualify. And if you do it, I can't participate. But secondly, more likely than not, you're going to have to pay it back with penalties and interest. And then your cash flow is going to go in the tank. And where are you going to get the funds? And Roger, as you pointed out, the 20 or 30% these third parties are taking. At that point in time, I now have, right now, if that other business does not get audited and they don't have to pay it back, then they have an unfair advantage against my client. And then my client looks and says 2, 3, 4 years down the road, Larry, you were wrong.
Which is possible.
We're doing it right. But if they get caught, then my client's going to be in business and that other one's probably going to be out of business. Roger, you're going to say something.
Yeah, a couple of things. First of all, not everybody that's doing ERCs is doing it wrong. So let's admit that there are a lot of people who are legitimate companies trying to do it properly. But those that aren't are basically putting a price on our clients' loyalty to us. They'll be loyal to us for $10,000, but they may not be loyal to us for $100,000. At some point, the amount of money becomes so great and so overwhelming that it causes a rift between us and our clients who look at us and say, I really like you, but there's $250,000 on the table. We need some way for someone to come to our defense, because otherwise we're going to have these people go to places where loyalty doesn't matter because it's all about the dollars. And
that relationship is broken. That relationship is broken forever. Now the IRS has more non-compliance.
Right. Well, they think that they have no resources, even with the new money, to check. But it has put a price tag on the loyalty to us for our customers. And I don't know what that number is. It's probably more for some of our clients than others. But there is a price at which they'll look at you and say, Larry, you've been great, but damn, you ain't worth that much money. I'm moving on. I'm going to do it. Everything has a price, and it's that's not the way the system is supposed to work. The competitive advantage that it gains, the fact that it pushes people away from the people trying to do it right. We have to have a tax system where doing it right matters. And right now we're running into a position where doing it right becomes a disadvantage.
Yeah. And on that, Roger, too, the kind of one of the other end results of that is that the client that has worked so hard to be compliant. I mean, they've done everything. We've just, they've really, really towed the line. There's not, and now they're in a position of, maybe this isn't right, but I think I'm willing to take the chance. And so it's like you said, it's a breakdown of kind of doing the right thing. And we do know that our tax system has always been an honor system. I mean, it is, and we know that. And we've trained, a lot of us have worked hard with these small businesses, training them what's deductible, what's not deductible, and people have tried hard to stay in the lanes that we've provided. But this is just a feeding frenzy. And when there's that kind of money on the table, like you said, for this short of a window, it's hard not to go for the grab.
Yeah, and what both of you just said, we talked about loyalty. The number gets large enough that they question us. Then the other thing is the fact, Kathy, they're like, well, I'm going to take the chance. And that's where I've said at some point in time, they go from a tax risk and a tax volunteer compliance to a business risk decision. For this kind of money, Roger, Kathy, Larry, I think I'm going to, and what do I have to lose? But I want to go back, Roger, what you said just a second ago, and I think Kathy referred to it. What we like to have from the IRS is some working tools. These people, both of you talked about, at some point in time, it gets to the point they're going to make that decision. And if they say, I'm going to roll the dice, I'm going to take my chance. But the other thing, that makes them question the tax system for the rest of their business life. That makes them to question us, what else have you not been right on? Okay. So then the trust of the other areas that we're helping people stay compliant. So what I'd like to do, I've got my iPad here. Let's go. I just like real quick to go see how the IRS helps us. Here's some tools. So I keyed in IRS, I just keyed in ERC. And what popped up was irs.gov after several sponsors. Some of them that's been talked about today, third parties. And then, so it says employee retention. So as we go through this, I'm looking for tools. Beware of the scams. Yep, that's good. Warnings of aggressive ERC marketing. They've got 6-7 points there of what they are. Now, here's what I'm looking at. Help me navigate this irs.gov to help the practitioner, but as important, to help the small business with payroll to figure out how to get to an answer. Let's go and get an answer. So eligibility. They got for details about the scams, click here. The 2023-105 just came out. More warning signs. I've read it, nothing new. Warning signs, and go here. So eligibility. Here's the eligibility. And here's where I'm going. If I'm not proficient in ERC as a practitioner, or I'm a small business wanting to learn about it, here's eligibility. So they talk about the credit after March 12th, 2020, and before January 1st, 2022. And then they go through generally businesses and tax exempt organizations that qualify are those that, and they go through the standard, were shut down by a government order due to COVID-19 pandemic during 2020 or the first 3 calendar months of 2021, or number 2, experience the required decline in gross receipts for the eligibility during 2020 and the first 3 calendar quarters of 2021, or then your startup business. Now, here's the neat thing. At that point in time, we go to limitations. It's 26,000. Do I qualify?
Well, let me ask you this question, Larry. How many of your small business clients go to irs.gov for their tax advice?
Well, they don't, but
You.
Google does.
They come to you.
Yeah.
And you try to do it right.
But I'm looking for tools here. Help me.
Yeah.
And Roger, help
You're
me
looking
find
for
some
tools. The small business owner is going to come to you. The small business owner, about 85% of them go to a preparer for some level of service. So they're going to come to you. So for all the time the IRS focuses on the taxpayer, focus on us, the practitioner, because we're getting the questions. We're the ones that need the help to navigate through uncharted waters. Part of the problem with this is it happened in a very quick time frame because we were in uncharted waters. We had a pandemic. We didn't know how long it was going to last, how we got here, if we would ever get out of it. So they threw a lot of stuff out in a hurry. Admittedly, there's some challenges, but gosh, help us get through it now. And this is where we need help because we're the ones getting the questions. So they're not going to irs.gov. If they did, they wouldn't know what they were doing.
And Roger, you're on point because you know what the next subtitle is? Need help? ? If you need help claiming the credit or correcting your tax return, see tips for choosing a tax professional. Those tips are about doing an income tax return because I clicked on it.
Oh, no, right. Yeah.
And I go over to something nothing to do with ERC.
No.
It doesn't tell me how to find a qualified professional for ERC. But you must have this must have been a script I didn't see, Roger, because you were in the very next step on irs.gov.
I thought you were going to say, call Mr. Wonderful. Was what it said after that. But
do what?
Call Mr. Wonderful.
Call Mr. Wonderful.
Yeah, he'll give you advice on ERC.
Yeah, he was on several times on TV, and I guess he's become an expert. But then here's the next thing: how to claim 941X. You know what's missing here is how to qualify.
Yeah,
because I read you qualifications because they didn't talk about. Anything about the mandate. Now they did refer to notice 2021-20.
Right.
And when you hit that link, you go to 102 or 120 page, and it's out there. And I had scrolled up down to say, is this the right place? Because it actually takes you to the law. And then I had to go down several pages and I had to know the tax jargon. So, and there's, again, how many tax professionals out there do not do payroll anymore? So this ERC is a payroll question, and now they're referring it to a tax professional. But again, where is the guidance in this ERC front page of the IRS? Because it doesn't talk about more than nominal. It doesn't talk about disqualified shareholders and like in the S Corp, et cetera. So the thing about it, then you have, and Kathy, you referred to this earlier, we have to dig. So I go back, where is the tools? Help the tax and the payroll professional through a decision series of, what do I need to do? And my concern in the end, Roger, you said it earlier, is Congress going to say bad, shamey IRS, and then everything goes away?
Probably when it's all said and done and the amount of the money that was handed out improperly that no one recovered is known. And that'll probably be 5-10 years from now when somebody does a study and realizes how much ERC money was handed out to people who didn't qualify, that the IRS didn't catch. Then we'll have hearings and we'll have a bunch of people standing up and yelling and screaming that we should have done better. But, it starts with, I don't want to age this group of talented people on this YouTube, but we have a lot of years of experience between the three of us. Have you ever seen anything in your history where you could get $500,000 by just putting a number on a line without any explanation?
No. And Roger, how do you audit that if you're the IRS?
How do I even know if you come to me why you got it? and where the numbers came from or any of those things. I mean, you just hand me a 941X and I said, yeah, you got $500,000. Great. Now what? So it was flawed from the beginning, and we just need to recognize that it was flawed because of a pandemic. It was flawed because we were mailing stuff into a building when nobody was, on top of mail that was already there. And all Congress cared about was the money wasn't getting out fast enough. Now we're dealing with the aftermath of that, and we need help.
Yeah. But Congress is hearing from all the small business owners that are not getting it fast enough. And that was legitimate. I mean, some people were stuck in the pipeline for 12, 14 months that desperately needed that ERC funding. And they're not going to hear again until, 2 or 3 years down the road where their clients are now getting audited and having to pay it back.
Right.
And to your point, Roger, that's going to be too late. We're trying to be proactive. We know that's going to happen. They're going to go to the small businesses are going to go to their representatives and say, hey, I got to pay this money back. I guess it was an error and I don't have it. What am I going to do about these penalties? And what we're trying to do is some kind of preventative steps so that clients don't get into that situation, but it's hard to get the attention. We've been jumping up and down for 2 years in front of the IRS, and you two have been more active on the Hill, and people it seemingly are not listening.
No.
And the other thing, Larry, that I think small businesses really need to understand why is the pressure increased to take this credit? I mean, why are we getting so much advertising, phone calls, TV commercials, mailers? Because this is going to expire. We're coming up on pressure points. And April 15th, 2024 is the first pressure point where you will no longer be able to get the ERC for 2020. So that's why we have this increased pressure. And then it's going to be April 15th of 2025 is the next pressure point. So it's going to get worse before it gets better as far as outside pressure on small businesses to get this credit, because there's money out there sitting on the table that a lot of these third-party companies want to get their hands on it.
Well, and I think to finish that loop, Kathy, what's the other big pressure happening? And I said this to a client the other day. I said, the person that's getting pushy with you, if you'll look at what you got laying here on the table, they get 25% of this. He goes, what?
Yeah.
He said, now I understand why he was so pushy. He said, I'll be candid. I told my wife last night, I'm talking to Larry again because my office manager says, this is the situation. And this guy's really trying. He cares. I said, he cares for 25%. And I said, in your case of your business, that's about $175,000 of carrying his part.
Yeah.
He goes, well, you can just see a light bulb go off.
Yeah.
I said, so let's go back and ask him questions. You know what happened? Guy's not returning his call.
Mm-hmm.
Guy's not returning a call because I said, let's get him on the phone. We're going to go through a series of steps
together. Yep.
And we're going to do it together.
Mm-hmm.
And we're going to go through. Here's rule number 1, gross receipts. Secondly, it's got to be a mandate, or if it's a supply line issue, it's got to be a mandate. As I go back to that checklist, what they left out of it was because of a mandatory required shutdown mandate for that time period. But again, they're not asking those questions. So no, I think we've, when I was at Mizzou, I did a semester, was a teacher's assistant in auditing. And I said the difference in a criticism and a critique is if you can write the management letter, you can find the issue, but if you can find a recommendation, you're now critiquing. You're part of the trusted party. So here today, we've kind of been a little guilty of telling the truth and kind of raw, but how do we reach out that small business, because these YouTubes, there's a lot of small business that watches it. If you were to, maybe we switch this now and say, hey, what's some things to look for from the practitioner view that would help that small business go, that makes sense.
Well, I think what you're saying that maybe we can help with is, and we've probably all been in this situation, when we told somebody you're not eligible, they hear the ad, they get suckered into the excitement of the money and all that, and then they come back to us and say, hey, look, Kathy, I got $300,000.
Mm-hmm.
I need you to amend my tax return because that's what the law requires. What do we do?
Mhm.
We're all, if you're not in that position today, you will be.
You will be.
Well, and then it comes down to the first question, because we know there's a notice out there, but that notice says you're supposed to be, I'm going to use the term loosely, you're supposed to be proficient in the ERC. Well, a lot of practitioners, as I said earlier on this presentation, was that a lot of tax professionals don't do tax returns. So the first decision is, do I have, according to that notice, do I have the skill set to do this return? Well, let's say I do. Then the question is, do I know enough, or where does the inquiry go of, do you qualify for the ERC? What all do we have? What all information do we have to gather? Are we now going to redo to see if they qualify? So again, we're aware of ERC. So we've eliminated the practitioner that just says, hey, I can't do this because I don't understand ERC. I don't do payroll. It's just out of mind. But now I understand it. One, I don't know whether this client qualifies or not because I didn't do it. And the other one is I do know and they don't qualify. Well, if they don't qualify, then I'll come back. Kathy, go first, and Roger, what are you going to do in that situation as a practitioner? This is not authority. This is trying to survive life in the tax professional world.
Well, I have two good real life examples of clients of mine. So one is a business that we did a sweep because we did get involved in ERC in my firm. So we did a sweep of clients to see who qualified in real time for the most part, as much as we could. So when I was going to do the 2022 tax return for this particular client, we do have on our due diligence questionnaire, did you apply for the ERC with another, third-party vendor? And they checked the box yes. And so we followed up and so I went back to the bookkeeper and I said, well, can you provide the documentation? Because, when we did that ERC sweep, you didn't qualify. And so she went back to the person that did the ERC, and he then sent an email and said that he was wrong, somehow made an error in the calculation of gross receipts, and no, they do not qualify. And so then I'm like, oh, well, that's kind of sad. So anyway, the client he wanted to do, he didn't want it if he didn't qualify, but, so he paid it back. We just got done filing those 941X Amendment 2 to then take the ERC off the table and pay the money back. And he was happy in doing that. He understood and to the credit of the original preparer, he at least verified in an email that he had erroneously calculated it. So there was that piece. Second client I have, the situation, it was that they got a large ERC. They do not qualify. I've calculated it a couple times. And so what do you do? This is a client that we've had for several years. They're choosing, as Roger put it, that break point. They're choosing, the large sum of money, just under 500,000. And so the trust has been broken on so many levels, right? Because we had the correspondence with them, we went through it again with them, and then they still proceeded with it, and then they didn't tell us, and et cetera, et cetera. So, I'm going to have to let that client go. And I say that, I mean, I'm in a fortunate position where we are turning down business all the time because we simply just don't have the resources to service more clients. But they're taking up the space of somebody that's looking for help and wanting to do things. So those are the two examples that I have, Larry, of how I have handled it. Very difficult situations, though, in both scenarios, and we have two different mindsets of clients as well. What was interesting, though, the first client, that preparer of the 941X did not sign as the paid preparer. There was no paid preparer signature on that.
Wow.
The only signature on that 941X was the small business owner. And same with the second one, although the paid preparer was on there, an attorney, not saying anything about that, but I don't think they're payroll people. But anyway, but those owners are signing off on that 941X. When you do that as a small business owner, you have to understand the liability you're taking, that you are signing that tax return and saying that you verify that information. And so when it comes to payback time, that's going to be very painful for some.
Roger?
Yeah, I think, and I think your examples are pretty typical of the two big issues that we run into. And I think what frustrates me, and I'm going to speak to it a little differently, is sometimes, and I'll speak here, the IRS takes too narrow an approach to things. We need to step back and look, using your two examples, where's the tax system in the situation you're in? You're making a decision, you're going to keep one client, lose one client. The client you're going to lose is going to go down the street. They'll find somebody who will amend the return and move forward. And based on the laws of averages, has probably a 95% chance to never be questioned. So what damage was done to the overall tax system by having that client leave you to try to do it right, because you didn't have any tools to use to solve that problem other than to tell the client, knowing that client would end up somewhere else, get the result that they want, and a large probability they would get away from it. If the system is important to us, we need to empower people like you with the tools that you need to say, let me help you get in compliance. You don't qualify. I know it's not possible. You said just under $500,000. I don't know if they still have it or not. They certainly didn't get it all, because at least 20 or 25% of it went somewhere else.
Oh, for sure.
We need tools. If we think doing it right matters, give the people who are doing it the right way the tools and the education and the necessary to say, let me help you do it properly, or you will get caught. Because if I can't do either of those two things, the system suffers. Because that business owner goes somewhere else, gets away with it, and it just continues to manifest that happens time and time again. And then it comes back at some point. You're very fortunate. You don't need that client bad enough. You can replace it. There's a lot of people that's not an option.
Exactly.
And at the end of the day, that person then has to say, well, I'll take the same risk you're willing to take. I'll just go forward with it just like you were eligible, and because I can't survive otherwise. And that's not good for the system. So we have to empower the people who are trying to do it right with the necessary tools to be able to make doing it right the right thing to do and the best thing to do. We don't have those tools today.
Right. And that's why earlier I went to irs.gov to say, how do I navigate?
Right.
There's nothing to navigate. But some of the tools we looked at is, for example, throwing out the idea of a soft letter. Why don't you put a soft letter to say, how did you qualify? Because Roger, as you said earlier, they just put a number on there. Nobody knows where it came from. I don't know how you audit that. I don't know how you do all that. The other one would be a soft letter when they send the refund out. As a reminder, you need to amend the return. Because how many of these income tax returns are going to go unamended, and they're going to get downstream, and then the IRS is going to be sending out notices that they were not amended, and why not take care of that up front and put a soft letter in with the refund saying you need to go to your tax person and yourself or your tax person and get the income tax returns taken care of. Now,
Larry, just you might want to qualify what when you say soft letter, what are you talking about? That's from the IRS.
All right, well, the IRS has done soft letters like an offshore. They said you may have this, and if you voluntarily come forward, you're not going to hear from us again. They've done it in cryptocurrency to say if you come forward, you won't hear from us again. So if you'll file this, if you'll file this amended return, you don't hear from us. Or here is things. Here's the tools. If this was gross receipts, check here. If this was from a government mandate shut down for these reasons, and put mandate and put some of the most common ones or other, check here and send it back in. What will happen is that's a tool we can work with, because they're going to come to who with that soft letter. They're going to say, Roger, Kathy, what does this mean? We have an opportunity
to explain
at the time. The other thing, Roger, a while ago, when you said in all the careers, and I've been around, you and I are in a race for how many years we've been around. And I don't know who's losing or winning, and we won't go into
I don't know what winning means in that race.
But anyway, I'm going to go way back. In 1993, there was a flood in the Missouri-Mississippi River, and there was some credits and money available, and there was fraud then. The interesting note is what they did is they used zip codes. So if you mailed in for this credit and the address of the business was not in a zip code that the flood was in, they sent you a letter. So what I'm saying is let's go to this. If you said, did you qualify by gross receipts? If it's no, then we're going to look at your zip code, because the zip code I live in, for 6 quarters, I'm not going to qualify because there was no mandate for at least 5 of those 6 quarters.
Yeah.
I mean, so I'm throwing out things that they have used in the past. This is not new. And a zip code is really a neat thought. I mean, think about it, because they know whether a local city, county, borough, state, whatever, had a required mandate, and you can put that into, a database and say, this business and this address has a good likelihood that they may not have qualified unless it was through supply chain, because of the supply chain and all those options. So I guess that's my big concern takeaway. Some of this stuff up front could have been so easy, and not something that 1993, they did it. That we're in 23. That was 30 years ago, and they didn't have the computers of today. So again, we're back to this. IRS, please help us with tools. And all 3 of us have been reaching out for quite some time.
And I think the other one they have to give us, and I've heard rumors that they're thinking about this, but the sooner the better. To your point, let's assume that they do soft letters, or we convince them that we were right, you have to pay it back. Give us friendly ways. Give us something. If I come forward now, friendly payment terms, understand I didn't get 100%, but something that is suitable and acceptable to that business owner who finally realizes I wasn't entitled to it, but I don't have $500,000 laying around. Give us something we can work with to incentivize that business owner to get that money at least partially, or start the payback, so that it's doable, and put a time limit on it, so that if you don't do it by a certain deadline, I'm sorry, you had your chance. I've heard that they're talking about that, but we need something like that sooner than later if that's the case, because people are coming to us now. They're not going to, and by the time they come out with something a year from now, people are probably over it, and they don't have less money to pay back than they would today. And they're not going to all of a sudden just go borrow it. It's a mess. And again, I keep reminding myself it was a pandemic. We did this in a hurry, but there's no excuse today. Help us.
Right. Give us some tools, and and like you said, come forward. If you come forward, there's no penalties. If you come forward, cooperate with us on whoever did it, and pay us the part you got. Because they've already said they can't audit themselves out of it. And when I heard that, you know what's on the street now? Why not do it? It's a business risk. It's small business. And so there are people out there going, well, what do I have to lose? They can't audit themselves out. I might as well try it.
Yeah, but you know how I feel about that, Larry. I am, I mean, we could say that about all tax returns.
Right. But
I mean, we
that's
have
not
such
you
a
and I.
low, so if we want to talk about risk factor, let's remind all these small businesses that your risk of an ERC audit is substantially higher than any other audit. I mean,
Yes.
and they will go, it will be, I believe, Roger, believe that it will be more than 5%. I mean, it's going to be a large number that are going to get audited. And I think once they narrow down the firms, the abusing firms, then they might go in the back, go into it that way. But I do think that the whole system is a voluntary system. And if we break down this piece, I think you guys both referred to it, we just start crumbling away at the entire system, the entire voluntary tax compliance structure, which is for those of us, I mean, I've been in the industry for 35 years. It's sad. It's sad because there's always people that are going to push the line or go over the line, but there's so many that really want to do the right thing. They want to pay their fair share, but they don't want to see the neighbor get 500,000 when they don't.
Right.
That's the tough one.
And downstream, I think we've all been referring to downstream. Does this help to improve compliance, or does this help downstream when that person goes, when that client you fire, they go to somewhere else?
Mm-hmm.
It's not just the compliance in ERC, but Rogers, you're referring, it's the whole tax system. And Kathy, I think that's where you're at here, that if we don't watch, it will crumble the whole system, because, it's just, no, we need some help. We need some working tools. I think I know a little bit about ERC, and when I navigate it, I can't navigate it on irs.gov. I understand their scams. That's the first thing. I understand some of their common things, but tell me something new. Tell me the most common things, tell me some of these things like gross receipts, and then explain if it's partial shutdown and you're essential, then what's more than nominal? I mean, that's been one of mine. If you just go to more than nominal, that one takes care of so many of the clients. And see, we've done a lot of ERC, but it's been in Illinois. It's been some like in Florida, California. It's been referrals from other practitioners. And there are, we've seen people qualify, Chicago and LA. There's some people there who qualify. They do qualify for all 6 quarters. Mm-hmm. So, no, we're not here to say, those need it and they should get it. The other thing in a lot of these companies, you will find out, the next one on that list, they have 3 companies. They have a marketing company, they have a legal, and then they have somebody doing the work. And it's not, and Kathy, I think several months, maybe a year ago, I think you run into that, ended up out in the Midwest with a law firm, and you had to go through this, and you couldn't just call the person. Nope. You had to go through several people to get to the final.
They're all layered. Yeah,
they're all layered. Yep. So the thing about it, it's and I can tell you from doing these on, I was it was worse than encouraged. I was literally pushed. Let me help you fill this out. You qualify here, but nobody talked to me about more than nominal. Nobody talked to me about quarters. They just said, give me your payroll. Nobody talked about disqualified employees. Just, supply chain. They didn't explain it has to be related to mandate. Not having, just because my supplier can't keep 2 shifts going has nothing to do with this credit. That's just a business. They can't get two shifts going, so they shut down a shift.
The other thing, because there are legitimate people advertising to do this.
Yes.
Mhm.
Or others that aren't. And I think one of the ways that, I think, Larry, you said your audience is business owners as well as practitioners. So I think one of the things that I would speak to both of those groups is a way to kind of understand if you're dealing with a legitimate group or an illegitimate group, is make sure that when they come to you and say you're going to get $500,000, that they could produce all the work papers
Right.
that they had.
Yes.
Because I'm going to tell you this, when the audit comes, if they just produce 941s in a check, you're doomed when the audit comes, because you don't have the documentation necessary that the IRS is going to look for,
Yes.
Right.
even
Right.
contest the claim with them. So if the company's not willing to give you, open up their books and records, show you the list of the employees, how they allocate between PPP and ERC, and what dates did they use, and what, if they can't produce that to you, Mr. or Miss Businesswoman, you don't need to do business with them, because you're going to be asked to produce that when the IRS comes in. And I can tell you, you mentioned April 15th, 2025, Kathy, on April 16th, those companies are all gone.
Mhm.
Yeah.
Mhm.
Well, and
Those records go with them.
Oh, for
yeah,
sure.
and Roger, that's one of the two things to the point of the documentation. That's one of the points I always ask when they say, like this one that I had where he figured out he was going to get 25%. I said, ask him, what documentation do they need? Well, some of these contracts here that I filled out, they have, this is the required information. And when I read through some of them, they do not ask me they ask me for gross receipts, by the month. They ask me for the 941s. They don't ask me for any supporting document, supply chain, even though in some of them it's checked. They don't ask me for the impact of COVID. My point is, they're not asking me to back up those things I check. But wouldn't it be nice if the IRS said, here, not only here's, they've got that list of, they're going to charge you too much. Well, I don't know. I couldn't charge a percentage on we do ERCs. We have a fee, a base fee. And then after you go over so many employees, we have an additional charge for that. We have a charge for the calculation. Then we have a charge for doing the 941, but it's a very standard fee. So they, they'll go, here's a fee, here's some of those issues they talked about, but help us give us some tools and frequently asked questions. If you get audited, here is the documentation we're going to be asking for.
Yeah, that's what I was just going to say.
What a
you can't find the IRS audit list on the IRS website. You can find it among our practitioner groups and everybody else, but why isn't that published so that we, again, to Roger's point, we can provide that to a small business and say, okay, if this is the credit you're taking and you believe you qualify, I want to provide you this audit list so that you're prepared. Because, they're not going to, if they don't ask for the documentation now, they're not going to get it.
Well, and if
they're not going to get it.
You want to send a soft letter out, if, in that soft letter, say something like, if all they asked for was the 941s, your credit is at risk. Because unless you know by name who the employees were and how much they earned in each quarter, there's no way you knew.
And the PPP.
And the PPP. So there's certain things, if the company didn't even ask for this, then it's assured that your claim isn't correct. So help us point out to these people, oh, maybe they aren't as good as they are. So if we're going to go to the trouble to send a soft letter, let's make it a long soft letter and let's put enough stuff in there to alert people that there were certain things that all of us know we needed to do the calculation. And we weren't unique. Everybody needed that information to do the calculation. So if they didn't ask for this, then they couldn't have done it properly. Because I've seen them where they just said 7 employees times 26,000. What's that add up to? That's your credit.
Mm-hmm.
Yeah.
And I'll put that number on a 941X in there. Guess what? You got a check.
Now here's a letter to AGC CPA firm, and it's a tax refund notice, and it's got a case number on it, and toll free 202. Well, I know 202 is Washington, D.C. So if you look up the zip code, you're going to get Washington, D.C. And then it says, please keep a copy of this notice for your business records. It's got all the phrase, this looks like an IRS letter.
Right.
And the envelope on the outside of it, important tax information
Mhm.
enclosed.
Mhm.
So,
And it's from Department of Employee Retention Tax Credit. I mean, it looks like an IRS notice.
yeah,
Crooks are good.
Yeah,
Crooks are
they're
getting
good.
better. I'll give them credit.
They're
They're
good.
getting better.
Yeah.
They're getting-
Yeah.
And the tax system is just such an easy place to go.
Mhm.
This one particularly, and again, it was well intended, but I just can't imagine I could get $500,000 from the federal government without telling them why.
Mhm.
I just got to put a number on. So you telling me if I just put this number on this line of this form, you're going to send me $500,000? Where do I sign up? I mean, that's the way a lot of people just took it.
Oh, for sure. Yeah.
It's-
yeah.
and
Yeah.
So we got to help them try to get out. We got to help the system work through this. And
And then when I look through the frequently asked questions, which is this document here, any reference to this, you just get the whole document. It doesn't, a lot of times I noticed on a couple of notices, now they say like, a shutdown is question 10 through 22. And I even see some of these ads that says you qualify for this if you had this, this, and this. And some of them are absolutely no in this document. Doesn't matter. So that should be an obvious. So.
well, our clients and a lot of our fellow practitioners are in tough spots right now. And we need to try to get, I keep coming back to this because I think it's important. And I think you guys agree with me. We've got to go into good practitioners who try to do things right still matter. And
Mhm.
we're
And
getting,
also, yeah. Sorry.
the money is making that harder and harder for people to accept.
Mhm. Mhm. But we are out there. I mean, we are out there. There's practitioners that are working hard to try to make it easier for others, to try to network, to just talking to another peer is helpful. You know, if you're a practitioner out there, just get some people around you, you know, bring it into a chat, you know, get some other feedback before trying to navigate this on your own. Because it is very daunting, and we're doing our best to work with or encourage the IRS to get these tools. I mean, we are working hard to hopefully some of it will happen.
Well, I kept thinking that at some point in time, there would be one of these companies roll with, CI, and they would use it as a marketing tool. That would be another tool, is that if there was, I realize they got to go through the court system and all that, but if I was the IRS, I'd be making certain offers to some of these smaller scams that they've determined, that the IRS has determined is, and say, here, if you'll do this and let us go public with it, that's what we need. But have either of you heard of any criminal CI action?
Yeah, there
know
is CI action. There is.
I know
There's
there-
probably 12. There's probably 12 cases. The big one was in Utah, and they're in jail. There's two people in jail there, but I did look that up, Larry, and there is activity. Is it being promoted enough? Probably not, to your point. Let's get that message out there. And but there is, there has been activity, and there's people that are in jail. There's people with huge amounts of restitution, but that's, I think the last time I looked, there was 12 that had gone all the way through. But
No. And
promoting
again,
it would be best.
Yeah, to say, here's some examples, make it part of the negotiated settlement to say, we're going to do this, but if you will, this is the penalties, money, whatever. But if you will cooperate, we'll make it this.
Mm-hmm, mm-hmm.
It's like, on the federal side, you go before the judge and say, I'm sorry, and blah, blah, blah. And they, you get a few points for a shorter jail sentence. Negotiate some of that, because that's another tool we could use out here to say, here's the documents they were using, and this doesn't qualify.
Right.
Right. No, we just, I'm worried particularly about a lot of the people in our community who just aren't knowledgeable about it or getting themselves put at risk because they don't know any different.
Right.
They
Right.
just come to them and they say, I got the money. Who knows how they told them they got it, where it is in their books and records, but they're just moving along, amending returns, doing it somewhere, leaving it in sales, whatever they're doing, just thinking they're doing the right thing. And,
Mhm.
Right. And I think that may be more prevalent than we think. I think there's a lot of small business. On one hand, they're innocent, but on the other hand, they're getting this money and they're not maybe asking questions, but they're getting the money and they don't realize that they don't qualify.
No.
But when it comes to taxes, that's not an excuse for the law.
Nope. But
Yeah.
there'll be a lot of people get scooped up in this. And
I think the other thing that another issue is when you've got to pick this credit, reduce your expenses back in the year for the credit,
Mhm.
then we got the issue of, does it get reported at all? Or do they double reduce it, or do they pick it up in the wrong year? Some of the K1s out there now are picking it up in the year cash basis and not in the year of. That may be a tax position, or that may be preparers that are not aware of the ERC and they're doing the income tax return and they're doing it wrong because they're not going back and amending the income tax return. They're just reporting it on cash basis in the year they get it. So you may have, they don't understand the law, maybe a tax position, but they may also be, who knows? I'm concerned about double reporting, picking up the wrong years, but they're not getting out in the front of it and saying, here's some things you need to be aware of.
Yeah, they got to talk to us in real world examples.
Right. And I think that we had brought that up, and I say we, and I believe it was you, Roger, a couple years ago when this first started, is could we get the option to report it in real time?
Right.
And it's, of course, it would need to be probably congressional, because by code, you do have to go back to the year that you're taking the credit for. But it certainly has created an enormous amount of complexity because of shareholder buyouts. I'm in the middle of two of those now, where these big companies got very large ERC. Now they're amending the K1 in a shareholder's final year, and so we've got different. And they're not, they're going to have to go back now and make the basis and the payout. It's very, very complex, and it's just that, and that's unfortunate that in the beginning there wasn't just some that, hey, this is cash basis real time.
And you're right, it did take, and that's another problem with this, is it did take Congress, and Congress was aware of it. And yet in our broken political system, despite no one disagreeing that would be a better solution, that's different than being able to have a bill actually pass Congress to give us the better solution.
Yeah.
And that's kind of where it was, that they both sides agree. Yeah, that'd be great. That makes a lot of sense. But
Kathy,
it never happened.
Kathy, your point, we just got a K1 here with an adjustment on it. And the crazy thing about it is this person had sold out, but they had sold out after the credit. And so now they're going back. They're going back and say, wait a minute, I get a K1 for this adjustment, but you now got to show me the money.
Right. That's what I'm saying. Exactly.
This is going to haunt us.
It's huge. Yeah.
This is not going away anytime soon, sadly.
So what's some good tools that a tax professional or a small business that's not engrossed in this the way we are, what would be some tools it could be a wish list of IRS help us, but it also could be what's some real tools that we, one, does a person qualify when they come in with the check? What's our due diligence? We've kind of discussed it, but to kind of recap some bullet points that for a takeaway, either things we'd like to see maybe the IRS to think about, and then the other list is here's the tools we got to work with right now.
I think that we came up with 4 because I listed them as we were talking, and it's nothing new. We've talked about it before. I mean, in different ways, but I mean, I think we have 4 really good takeaways from this discussion that would be specific asks for the IRS. 1 is soft letters, repeat ask. 2 is establishing the payback terms, the voluntary, possibly voluntary compliance, but set and clarify the payback terms, how somebody is going to do that, and would there be some kind of voluntary compliance. FAQs updated for practitioners, practitioner questions. What do I do if? What do I do if? And then 4, publishing the audit guidance. Why isn't that published on the IRS website? I mean, I think those are 4 really specific things to ask the IRS. And then I do believe for the small business out there, I do believe the IRS has done a very good job of raising awareness for this small business. Maybe not the detail of how, to your point, Larry, but be aware. It is out there. You know, I think they've done some good messaging on the IRS website. We continue to provide that to our clients in our quarterly correspondence, just making sure that stays in front. You know, this is still an issue, the ERC abuse.
And Larry, I'll speak to the practitioners because I think you did a wonderful job on it from the IRS standpoint. I think we have to be reminded in this case that our biggest asset in our business is our knowledge. And what we need to do in this case is we need to become knowledgeable of what the rules are. If we're not, because I think a lot of people thought they could escape this problem because they didn't do the ERC claims when they first came out, but now you're going to be brought into it either through a crazy circumstance like a buyout, or you're doing the amended returns or whatever. So the first thing you can do is become knowledgeable, know the rules, know what they are, and work on a communication strategy, because it's not an easy discussion to tell somebody that got $500,000 that they shouldn't have.
Mm-hmm.
And but that's our job. So take advantage of webinars, go to wherever you have to, but become knowledgeable, be able to communicate effectively to your small business owners, and ultimately just stick to your guns and do the right thing.
Mm-hmm.
Okay. Well, we've looked at the IRS with some comments. We've looked at the small business. And I think overall in this, and we keep pushing for this, but IRS, the practitioner community, we've got to be working even closer together than what we are. And I think that out of this, we need some lessons learned. I think we need real world examples.
Mm-hmm.
So the FAQs, not just here's a question, but it's like regulations. The thing I like about the way council does regulations, they go through a series and get you from A to B. So just not the FAQ standing alone. And I think that if the IRS is not going to audit themselves out of this, and it said so, then Kathy, we've been yelling for soft letters since forever. But I think help us with tools. The example of maybe in the soft letter, or but then even before you get there, advertise it, get out there. If you live in a zip code, as an example, that had mandates, look at what that was, because that may be what we're looking at. And if they will give us their audit tools, I was on an advisory group in 92 and 93 on the audit guides. And there was a big internal within the IRS. There was 2 factions. One said, we don't want to release these because that's our secret to do the audit. And the other group was, we want to release this for educational purposes. The decision was for educational purposes, and immediately there was an increase in compliance, because we know I think exam measures compliance. It doesn't do a lot for increasing compliance, but if we're aware of the issues, and I'm going back to the audit guides at market segment, but if between everything we've talked about here is more effective communication and partnering. And I think that the more I know about this, the more I'm concerned. I'm really concerned because there is so much money here. We're going to see all kinds of tax litigation. And I've intentionally left that term alone till toward the end of this. But with the kind of money out there, there could be some major cases. So I think the jury's still out on whether Congress will say, sorry, IRS, you shouldn't have done this. But bottom line, this is all about being compliant, because we all three have to get up in the morning and go back to work and do it right. And that's what this is all about. So any final words? I sure appreciate you all participating in this open discussion. I don't know that we solved anything, but I think there's some small businesses, and I think there's some practitioners out there that can say, you know what, we're not in this alone.
Right.
We're not in this alone.
That would be my final word, is just reaching out. Just reach out to other practitioners. Roger said it, webinars, chat groups. It's just a hot topic, and trying to navigate it on your own is just virtually impossible. So reach out, get some help if you're not familiar with it. If you're, you want to bounce, you can contact us. You can, but get people around you, because there's a lot of us practitioners out there that really are very, very concerned about this and going forward. This is the future also of tax for the next 5 to 10 years. This is not going away anytime soon.
Now, final comments, Larry. Thank you for inviting me to give me a chance to have my say. And I'll echo what we've said here. If you can find a way to contact us, I'm happy to talk to you about it. But find somebody that you trust, talk to them. I'm confident we'll get more guidance in the future from the IRS. I don't think we're stuck where we are, but it's going to be tough and it's going to last a while. And, we've gotten through other things. We'll get through this one.
Yeah, there's not a day goes, almost every single day, there's at least one or more practitioners that call.
Yeah.
And I will say, here's a good note to leave on. We've probably picked up 3 or 4 good clients because they were wanting to do it right, and they talked to somebody about the ERC, and the client was able to kind of discuss it. And this new business was like, we picked up one last week. This new business said, hey, if you can explain it to them and they can understand it, that's what we want. So you got to look for those good things out of it. So we have actually picked up 3 or 4 really good clients of people saying, I want to do it right. I want the knowledge. I want the communication. So I'd like to leave on a note. There is some silver lining in all this. So
always.
Again, look forward to in the future with you all. Maybe we can do this again, update it. We get some new information, come back, and we'll put it out there because it's free to everybody. And to me, it's another channel of reaching out. Thank you all. Have a great day.
Thanks.
Thanks, Larry.